Hi everyone, today let's talk about earnings. Then we'll hit the charts, then we'll look at my results. I continue to hemorrhage money, but it does seem like the markets are starting to roll over. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Getting into earnings, starting with Apple. The short answer for all of these earnings is that they all missed. Not by much, but they are declining at least a little bit. You can see Apple down more than 4% after hours. They missed on revenue expectations. Holiday quarter was 5% lower than last year, resulting in their first decline since 2019. They say the strong dollar and production issues in China affected the iPhone 14 Pro and the Pro Max. They missed on EPS, $1.88 versus $1.94, down 10.9% year over year, so earnings are declining. iPhone revenue down to $65 billion versus the $68 estimated. Mac revenue down. iPad revenue actually beat 9.4 versus 7.7, up almost 30% year over year. Other products down $13.5 billion versus $15.25, and services revenue beat just barely 20.77 versus 20.67. So overall, doing well. Gross margins met expectations, but they're just not selling as much stuff. This should be expected. I talked about this a couple days ago. I thought they would come in a little weak. I wasn't sure how it would affect the stock price, but clearly they're moving down here after hours. They did put out guidance that they plan to start growing a little bit in the coming quarters. Very small percentages of growth, but they don't expect to decline again the way that they did this quarter. Moving over to Amazon, similarly, they missed, and they actually put out weak guidance, so Amazon probably doing the worst. Fairly expected. Retail has been rough. You can see their forecast here, $121 billion versus the expected $126 billion. Analysts were expecting slightly lower than that, but they're lowering their guidance. You can see earnings per share, 3 cents, revenue, $149 billion versus $145 billion. So beat on revenue. Web services, slight miss. Advertising, slight beat. The big thing here is they talk about AWS slowing down. Grew at just 20%, down from 27%. This is one of their big growth drivers. Retail's not quite driving the growth the same way that it used to. They talk about revenue for the year increased 9% as inflationary pressure affected them. So again, beat on revenue, miss on earnings, and their stock is down about 5% in after-hours trading. Moving over to Alphabet, you can see they missed on earnings. Revenue for YouTube fell short. Earnings per share, $1.05 versus $1.18. Revenue, $76 billion versus $76.5. YouTube advertising, less than $8 billion versus the $8.25 expected. Cloud revenue, slight miss. And traffic acquisition costs, just under $13 billion versus the $13.3 expected. So slight beat on that. They also said they lost $1.49 billion on equity securities during the quarter. But the big issue was advertising was down to under $8 billion versus the $8.6 the year prior. So slowdown of advertising, we talked about that. We thought that was going to happen with Snap. Snap did go down. Their advertising wasn't good, and that did affect Alphabet. People just aren't spending on advertising the same way they did during the pandemic, and you can see they're down 4% after hours. Moving over to Friday economic calendar, I just want to highlight we do have a non-farm payrolls tomorrow. That is a big announcement, expected to be 187,000, and the unemployment rate expected to be 3.6%, which is a slight tick up. Hourly earnings, 0.3%. That is an interesting fact for inflation to see how much wages are continuing to go up. And then in the afternoon, we do have a Fed President, Mary Daly, speaking. Moving over to the charts, starting with the S&P 500 on the daily and the weekly. With these bigger moves, I've been having to stick to the higher time frames here, but you can see on the daily chart, we gapped up and rallied, continuing with this parabolic move to the upside. Really what I'm looking at here is this gap back from the August move down. That gives us a price target of about 422. We are selling off a little bit here after hours. Based on the weak earnings that we've been seeing, we did also get to overbought conditions finally on the daily chart. Got right up to 69.21. So just a little bit short of that 70 reading, but pretty much overbought. You can see we're actually slightly lower here, still on the EMAs compared to that previous rally. If this does start to roll over, you could call it a little bit of divergence. And again, if we do roll over, we're looking at support down at 407, 408 as that first level of support, which also coincides with the highs going back to the middle of December. Moving over to the NASDAQ, you can see momentum starting to fade here on the hourly. Looks like we might get at least a down day here tomorrow. Then we'll have to pay attention whether this structure starts to break down, looking at the 55 EMA as support, probably somewhere in that 298 region. $10 of downside. Sounds crazy, but we've had these huge moves up, so support is pretty low. That also puts us in the same vicinity as the high of day from February the 27th. This move over the past 2 days obviously has been ridiculous, and it is not sustainable. Looking at the 4-hour chart, you can see we do have a step down as well. You can see we were extremely overbought. Let's jump that up to the 1-day chart. You can see how overbought we were here, way over the support lines. Started to fill these gaps going back to August. Still have that same gap on the bigger move down. Probably not going to make it that high, but we did start to fill some of these gaps going back to 12 September and did slightly take the high from that day as well. So seems like a decent level of resistance. Did touch that level, and we're definitely selling off here after hours, getting down to 307 all the way from around 312. Moving over to the Russell and the Dow, you can see the Dow did not do much of anything today, did not participate in the rally. It's been basically flat over the last few days. Dow is definitely not interested, which is strange. Down slightly here after hours due to Apple, but moving over to the Russell, you can see another huge move up, did come up to this resistance line that we had been watching, overshot this previous trend line, and I would expect it to fail at this point, but I also expected it to fail at this point, so certainly could go higher, I guess. Going back to this August rally, we're filling some of these gaps. Didn't quite fill all of them, but did fill some of these on the move down here. Also looking overbought on the daily chart. Definitely not a great time to go long. And then looking at the Dow, you can see RSI continuing to stay flat, actually ticked down here on the daily chart on the MACD. Moving over to Apple here on the 4-hour chart, you can see this huge run we've had, did get a big step down after hours, got all the way back down to 145 after getting all the way up to 152. Huge range in here, lots of volatility, took out the highs by a lot, and then we filled that gap going into the after hours. Looking to see if we break below 143. If we do get below 143, then you have to start looking at these next levels down at 137, maybe all the way down here at 133, 134. And then once we get into those zones, I would expect 134 to be a decent level of demand. People start buying back in at this level, depending on how the market digests these earnings and forward guidance. Moving over to Google on the 4-hour chart, you can see the rally we've had all the way from $86 up to 112 here after hours, and then we're sinking back down to 103, 104. Again, structure still intact. Looking at this 100 level, if we do get below that, then we might start to trend down. Definitely going to be a level of support. Looking for interactions and a break below that level, possibly a break below, a retest and a continuation. It's been pretty flat for a while here. Going all the way back to October 25th was the last time we were at this price, so pretty flat here for a while. Definitely could sell back off into this more 94, maybe 90 level. But like I said, looking at that 100 level as the next level of support potentially, and I do expect this to move down into tomorrow as well. You can see on the MACD getting a step down, RSI ticking down pretty strongly. And I would expect this to have some follow through after the monstrous run we've had pretty much across all tech equities. Moving over to Amazon, let's jump this up to the 4-hour chart. Similar story, it's been running pretty strong, been staying above this trend line for a while. The trend line's probably what I would be looking at. Again, going to have some decent support at this last level, 102.50. Looking at that level for support. Also some decent levels back here at 98.20. 98.50, somewhere in that zone, and then we have support back down at 101.50, so pretty consistent levels of support in here. We'll see how we react going into tomorrow. Similar thesis though, big step down tomorrow most likely into support, then we'll have to see what happens from there. Could certainly continue on this trend, still intact, but this is a major move down compared to what we've been seeing here recently. Moving over to consumer staples and consumer discretionary, interestingly, we did both move down, basically flat on the day for consumer staples. Consumer discretionary did gap up and did not fill that gap back down to 151.50, but pretty extended. Everything's pretty extended. Definitely looking for a bigger move down potentially tomorrow. Overbought conditions on discretionary. Consumer staples definitely looking fairly flat. Could certainly sell off here a little bit, but I wouldn't expect it to go far at this point, back down to maybe 73, 73.15. Still seeing that 200 SMA on the 4-hour chart as a strong level of support. Moving over to transports, I don't really know what to make of this. This has been a bananas run on transports. Transports don't usually move like this. Continuing to hold, sold off a little bit at the end of the day here, but huge extension, filling lots of gaps on the August high. And the Dow just went flat today, so Dow not keeping up with transports, transports moving like a tech stock. Definitely interesting. Clear divergence between transports and the Dow. But does that mean we're going to move lower? I don't know. This is not something that I've really seen here recently, where you have transports moving significantly higher, the Dow going flat. And you can even see here after hours, transports are basically flat. Something to watch going into tomorrow. Maybe this will pull the Dow higher tomorrow. That would be interesting. Maybe this rolls over as the SPY and the NASDAQ roll over. Definitely something to watch. Could go either way at this point. Moving over to semiconductors on the daily chart. Still at key resistance. We did move slightly higher, right into that resistance zone. Definitely looking for a sell-off into tomorrow. Overbought conditions on the daily chart. Everything here says that this is going to sell off. Still a bullish structure. Still should find some support. Maybe down at 220. Could find it at 230 back in this zone. But either way, really extended and at pretty strong resistance. Again, filling gaps going back to this August move higher. Got through all of those, and we're actually testing levels going back to 20 April here. Could certainly go back and fill some of these gaps back from the April move down. But right now, you wouldn't expect that to happen. I would expect this to sell off into tomorrow. Moving over to stocks above their 20-day and 200-day average. I do want to bring in the 200-day here because we continue to make new highs. We have more and more stocks participating above their 200-day moving average. Let's actually jump this up to the 1-week view so we can get a better perspective of where we're at. You can see we're pretty extended, definitely taking out lots of highs here, getting back into this overbought condition potentially. But you can't be counter trend all the time. This is definitely confirming that with this rally is legit. Probably should have been paying attention to this a little sooner, continuing to make a high, higher low here, higher high, confirming that there is strength in this rally. And like I said before, if we do come down and test some of these levels, I would expect to see some support come in and potentially take us into higher levels from here. Moving over to the dollar, you can see we gapped down and rallied through the session here today, right back into this level of resistance. So we'll look to see what happens here. Still expecting this downtrend to continue. It's very strong. It just seems like we're getting a slight retrace, that this could certainly continue back to the downside. Looking at the daily chart, you can see we're right at the 9 EMA. After getting fairly close to that support line that we've been watching, I may look to remove this section from future videos if the dollar doesn't start to make some more decent moves. But right now, you can see we've been in a holding pattern for several weeks, and it's not really affecting the markets the same way that it used to be. Moving over to high yield bonds, gapped up and basically retraced throughout the session, showing a little bit of weakness here. It would definitely be interesting if we gapped down and then started moving lower, like more like a gap reversal. Certainly possible, but you can see momentum on the daily chart picking up. Could be a gap and go potentially, starting to retrace back into this August level, just like the major indices. Certainly possible. You'd look for a fill back up to maybe $97 to get all of these levels filled, to get all of these gaps filled. Certainly possible. If we do continue to see GA&K confirm to the upside, should expect that stocks will go higher as well. Might be a little tough after the earnings here today, but it seems like the underlying stocks, the oversold stocks, are starting to move higher. And that's why we're getting more participation above their 200-day moving averages. Moving over to TLT, we got first test of the 200-day moving average. Did get a slight rejection from there. Definitely seems like we might continue to consolidate before we push up through that. I do still expect to push through and push back up to maybe 115. Certainly possible. Maybe we move back down, find some support once again in this 106.50 level, get that second push up into the 200 and then push through. Doesn't usually go right through on the first pass. Get a second test and then get that continuation through. Certainly possible. But right now, we're still in this kind of bullish swing to the upside, in my opinion. Moving over to the volatility index on the 4-hour and the daily chart, you can see we made a slightly lower low here, getting all the way down to 1707 just for a moment, and then getting pretty strong rejection here into the end of day. Does look like an upswing potential. Again, looking at this upper trend line as a target. If we do get a break of that level and we start to swing higher, that would definitely be interesting. But right now, we're still in this downward channel. You would expect rejection if we do get into this 20 level. So slight downturn for markets. Find rejection at the 20. VIX moves down and equities move higher. Moving over to me, I just can't seem to get on the right side of a trade. So I was long into the open, took a little bit of profits, short into the midday, and then we rallied right into the close. And I took off those positions because I did not want to be short into the earnings. I thought there was a chance earnings could come back pretty decent and markets could move higher, but they definitely didn't, and all of my short positions would have been profitable. Unfortunately, I did not hold them into the close. And because of that last swing higher, it did put me in a negative position for the day, which is super unfortunate. Otherwise, looking into tomorrow, we do have a slightly bearish structure, especially with the catalyst of earnings. Looking at non-farm payrolls tomorrow morning, that could be interesting, could certainly push us lower. And if it does, that could be a bigger break in the structure. And then we'll be looking to those lower support levels for this trend to see if they can prop up this trend for further highs. But right now, we're pretty extended, and we're looking for a little bit more of a retrace in the short term. Let me know down in the comments section if there's any charts you would like me to go over, or where you think the market is going tomorrow. Definitely like and subscribe if you got any value out of this video. And make sure you hit the bell so you don't miss out on any future episodes. I make this video every single day that the markets are open, as well as Sundays. So definitely check out any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading, and have a great day.